In this video, I'm going to show you how to find some beautiful volatility setups like this one inside of the S&P 500. It involves waiting for a volatility edge and knowing exactly when and where to enter with a defined risk to reward opportunity. Let's get started and I'll break down the setup in more detail and how you can find it yourself. Now, the first rule of our setup is knowing when we actually care to trade and when we don't. We only want to trade when we have a volatility edge. And the volatility box models make it really easy to know when you actually have that volatility edge. Whenever price action breaches the cyan entry lines is what we call them, which essentially means whenever price crosses these cyan lines, that's your cue that you officially have a volatility edge. So in this case, when price crossed the cyan entry line in the S&P 500, that was your sign that, hey, inside of the S&P, you officially have a volatility edge. You have a reason you want to enter, and you have volatility giving you a better entry price than normal. You're buying the dip at a discount, and a discount that you find to be substantial. Now the question is, when do we actually enter? What is the confirmation trigger? When do we know that the selling has subsided? For that, we use our overbought, oversold confirmation signal, which is called the edge signals indicator. It simply plots a green arrow for buys, a red arrow for sells. So in this case, we're looking for a green edge signal arrow since we're waiting to buy the dip here. As long as that happens before price goes outside of the green cloud, so below 66.91, as long as we see a green arrow somewhere here, that's our confirmation that, hey, now we're looking for price to stabilize and to reverse. The risk on this particular trade is 5.25 points, and that's what we're looking to risk as well. It's the distance from the cyan line to the outer edge of the clouds, and you can also use the labels in the top left corner. The labels tell you exactly T1, the stop price is 6701.25, the entry at 66.96, and our stop at 66.90.75. So now we wait for the entry, so we'll pull back to the cyan line. And once that happens, we already know our T1, our T2, and our stop level. So everything is ready to go. The rules have been met. Now we're just waiting for a pullback to the cyan entry line. With this red candle pulling back here, we're officially pulling back to the cyan line. So we're getting the retest and our entry getting filled. If you look at SPY here as well with the hourly model, so let me load in our stock hourly models. You can see a breach here as well. So pick your asset class, but same idea. You're getting a volatility edge inside of the S&P 500, and all of our rules have been met. Now this trade is hands off. We're currently letting it manage itself. We have our stops and our T1, T2 already ready to go. Here's what price action looks like. So now we've seen more oversold confirmation signals. You'll see 3 total green arrows. You'll also see prices chopping around here at the cyan line. We aren't seeing buyers or sellers indicate one way or the other. Same thing inside of SPY as well. So right now we're waiting for some directional clarity while we have our entries alongside entry. All right, we're now in the final hour of the markets, and you'll see we're making our way to our first target. We chopped around a little bit, even had a little bit of heat, but now we're making our way right back to that 6701.25 level, our first target. Once we hit it, we're moving our stop to break even and then trying to see if we get to T2, which is at 6707.25. So that has a break even stop. Reason you might get there, you'll see the market pulse is starting to switch to green here. That trend might be shifting. And if we can ride that trend up to 6707, that would be really nice. Here with crossing 6701.25 decisively, officially hit T1, and that gives you an example of how to take advantage of intraday volatility in the S&P 500 in a very systematic, process-driven approach. You see how we crafted that trade. We started by waiting for a volatility box breach. We then waited for the edge signal confirmation. Once those two were met, got our entry at the cyan line, had our defined entries and exits, and waited for the trade and let itself manage itself out. Take care, everyone. Good luck trading, and we'll see you in the next update.